presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last few years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shue filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. We're going to have a good show today. You guys, why don't you give us a call? You send me an email at jacob@tfnn.com if you don't want to call. We love hearing from you guys. You know, we had a caller yesterday with some pretty good questions. We're going to take a look at that a little bit today as well. Let's take a look at where we're at, right? So we're still testing kind of the highs for today. At least we're looking at the E-mini right now on, lower volume again, right? And that's kind of be expected. Of course, this is a big rally up from an oversold market. Sometimes when that occurs, you can kind of get a little bit of a fervor in buying, and we might see maybe a trickle back down at least the opening session next week. Again, testing those highs with lighter volume of the past few days. Sometimes that can set up, kind of a bearish signal in a sense. We might be going sideways here for a little bit. Of course, what really happens is, what really matters is what happens in September, right? If we do get that interest rate cut, I think this market is going to continue to go, right? We might get some consolidation until that point, but that's a really big fundamental driver. Of course, if something else happens that's bad and for whatever reason we don't get that interest rate, of course, that's also pretty tough for the market. But a lot of people are already betting on that. Of course, you have a lot of short interest out open on the dollar as well. Of course, that's indicating that a lot of people are believing that we're going to get that interest rate. It seems that we're going to get that decrease as well. The Fed seems not to be... there's been a lot of calls of people saying that we should have a higher than just like a 25 basis point interest rate cut the first round, but it doesn't seem like the Fed wants to do that. Again, I think they are being pretty cautious with this. Let's see, the SPY's up about 0.33%, the Russell off about 0.41%, the NQs as well. Again, we're kind of testing this all on lower volume. You had some move up here overnight, kind of a sideways move. Crack down a little bit on the open, and then just really get a sideways pattern, around lunchtime. We get that nice pop up, and then we're coming back down again. I want to say too, this morning I wasn't looking at the markets per se because I was getting everyone in and ready for Larry Pesavento's live trading Fridays. We had another really stellar session, and what's perfect? Let's say you haven't gotten in on this yet, right? You've been kind of thinking around, it's like, I don't know if I want to do that. You get 2 trading sessions. Okay, he does this the second and fourth Friday of every month. Okay? It's a really good deal. And what's even better, right? If you haven't joined yet, we've been getting so good at understanding how this needs to run. There's no flaws. It's seamless integration, getting you into the den. Larry knows the best way to do this kind of now. He's been doing a fantastic job. So I really recommend getting in there. At least just trying it out for 1 month because it's really fantastic. I learned a lot from Larry with it. Again, one of the really cool things about working here, right? I mean, I have a traditional education in finance, and of course we've done investments as well when I was in there, but that is so different than actually being in the world and trading, right? And all my models that I learned and apply, those are all great, but what is the market actually saying on a day-to-day basis? And that's where this technical analysis comes in, and it is fantastic, and I learn so much when I watch Larry. Guys, I really recommend checking that out. Let's take a look right now. You have the Dow Jones flat currently. Gold staying pretty strong at that $2,468.20. You have silver trading at $27.56, and then copper at $3.99. Crude oil staying around that 75 to 76 area. We have a lot of it for sure. I think you might be getting, a few days here. Well, this is on the daily here. You get a pop up today. but we've been going up a little bit. Let's see on the month. Yeah, so I mean, you have this come down here, pushing off from 71.67. You had Trump speaking about that if he wins, he's going to replenish. If he wins, he's going to replenish the petroleum reserves. This is obviously a little bit bullish for it as well, but we are just producing so much oil, it is unreal. Let's take a look real quick. Well, hold on. Let's finish. You have Tesla doing not much today, kind of sideways, still below that 200 level. Steel Dynamics down 0.62%, and that dollar staying pretty sideways right now at that 103.13, kind of near the lower end of its trading pattern. But again, if we get that interest rate cut, you're going to have this dive down against the other currencies, and that explains why we have a lot of short interest out in the dollar right now. Meta up 1%. This is becoming a really, I mean, it's been a solid company for a long time, right? But it's just becoming really matured, and it's interesting to see that. Obviously, they've recently issued a lot of corporate debt in the form of bonds, which is nice. They're not diluting shareholder value. They can determine when they want to pay those bonds back, at what rate. It's very neat. And I think another thing about that is it kind of explains or shows a little bit that they're really dedicated to pushing out their AI, to pushing out the metaverse. I mean, I think of, what is that movie Back to the Future, right? When he's done playing Johnny B. Good and he's like, you're not get that, but your kids are going to love it. I think that's what the metaverse is going to be, but that's a long time out. But let's be real, they're the only company really trying to do it, I would say, besides for Roblox, but that's a little bit more mature from Meta's end. You have Disney just staying down in the dumps at 85.43. We were in the danger zone, at least in my portfolio with that. Not very happy about it. And Apple up 1.23%. Rivian's getting sold off today. I believe it was earlier. Yep, down 4.65%. It'll be interesting to see what happens in the next quarter if they can still get some purchases going through, and they're going to be able to sell those cars at a lesser loss, right? Their input costs are far better. They're finally reopening some of their factories. They did burn through a ton of cash April through June, about $1 billion. But hopefully this is not going to be an issue for them for much longer, and they're still on track for profitability. I am seeing more Rivian ads than ever, okay? And you say, well, Jacob, that might be because you're researching it, you're Googling it, blah, blah, blah. These are on completely different Google accounts. It's nothing to do with my prior search history. I'm seeing a lot of advertisements for Rivian. That is a good thing. I see more people than ever driving these cars. It's interesting. I don't know. Do your due diligence if you ever want to get into something. But I might be saying this as cope as well to hope that I make some money on my investment with it. Let's take a look at Intel. Speaking of things that got cracked, down 3.39%. Of course, they had massive issues with Raptor Lakes. They were selling them overclocked, and it was damaging the silicon in them. They might have some issues where they need to call those back. It'll be interesting to see what happens. Now, they had something that came out. Well, we're going to the break. I'm going to get what they said because they released a statement on Raptor Lake. So hang right there, and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Street filling in for Tom O'Brien. We were talking about Intel before we went to the break. Off about 3.54% today, trading at 1976. They have a lawsuit out saying that they misled investors, how well they were doing. Their foundry business is terrible. They're blowing leads. God, it's kind of rough, right? And then the Raptor Lake CPUs essentially were selling them overclocked, and it was causing structural issues. So they just released 1 o'clock today, a statement about how it's addressing the Raptor Lake CPU. Okay, here, first thing, this is just not the position you want to be in if you're Intel. Right? I mean, yeah, they're making the CPUs right now. Okay, big deal, man. All the hype is around the GPUs, the tensor processing units, NPUs, XPUs, whatever, you know. These guys are screwing up CPUs right now. They're having to deal, instead of, you know, designing better chips and pushing it out and working on their foundry business, they are addressing just poor manufacturing, right? That's affecting their newest gen CPUs. And it's terrible. You know, I mean, even with the money from the government, you know, and they're still kind of in this situation. I don't know what goes on from here for Intel. You know, the U.S. government needs a corporation that's, you know, in-house that is going to develop and design chips. And Intel was supposed to be that baby, but it's not running. And this is a massive issue. And I don't know what happens at that level. I don't know if, let's say, 2-3 years from now, they don't get their act together. Do they get taken private, right? I mean, do they have the government interacting with them at that level? I mean, this is a pretty high state level, you know, kind of interest, and they're blowing it here. So this is what they're saying, right? Let's take a look here. Intel is currently distributing its OEM ODM partners a new microcode patch. Okay, so this is nice, right? This is going to essentially allow it to not overclock, essentially, and burn up the silicon, right? So this brings stability back in on essentially an update, as opposed to having to take the chip or the machine that has the chip and send it back. That was going to be probably the biggest L Intel would have taken at that point, is if they had to return these machines or the chips. So it's here for all Intel Core 13th, 14th gen desktop processor users. This patch is being distributed via BIOS update, which is great. It will not be available through operating system updates. That's crazy. But Intel, I mean, it makes sense. But still, Intel is working with its partners to ensure timely validation and rollout of the BIOS update for systems currently using the service. I mean, I think that would make sense that it would be BIOS and not OS, unless I'm missing something with that. So the Intel, let's see, instability analysis update, the microcode background performance implications. So Intel has released 3 mitigation-related instability issues. So the Intel default setting to avoid elevated power delivery impact on the processor, that's underclocking it or just bringing it back to a normal level. Let's see, ETVB, which is a whole other issue that was causing it to really run unstably, and then electric elevated voltages. So they are fixing it, and this will be done through that update, which is nice. Let's see, it is sure. Okay, and they are still honoring the extended warranty program, which is very good, but they still have a lot to deal with. And I think as well, you know, that lawsuit coming out, I mean, you had a lot of people, you know, buying in this area, you know? I mean, really right here was a lot of it too, but this was supposed to be the winner of this year. It had been lagging behind, and it turns out there's a pretty good reason why it was lagging behind. And then you have the CEO posting weird stuff on Twitter at a strange time. And anyways, yeah, that's really rough. I know I was kind of rosy on it maybe a month ago, but I said, hey, okay, maybe the Raptors not that big of a deal, okay? Well, it turned out to be a super big deal. And then the internals of the business were just bad. So anyways, very interesting from Intel. You know, you'd love to see you know, old school American company make it. And maybe they will, but I think maybe at some certain point what's going to end up happening is the C-suite is going to need to be changed, and you get some younger blood in there. They understand that they need to keep talent, because that's another big problem with Intel is they're not keeping talent. Again, why do you want to work on CPUs when the new hot thing is all GPUs and the TPUs and NPUs? And that's a really good question, and I'm not sure how they're going to be able you know, to kind of bounce back from that. Let's talk a little bit about HIMSS, okay? So obviously big news with Eli Lilly. They killed earnings, they revised forward guidance, and the supply issue with the GLP-1 drugs, okay, semaglutide or Wegovy, is gone. All right, so that's going to be kind of rectified in the coming quarter, okay? You have HIMSS up a little bit at 1.45% currently. What I asked yesterday at the end of the show is how does this news affect HIMSS, right? Because HIMSS offers these semaglutide type drugs, the GLP-1 type drugs, at a cheaper value than Eli Lilly does. So what I found out doing some research, which is very interesting, so HIMSS recently acquired a compounding pharmacy, which is quite interesting. And this is what they were doing. They were using the compounding pharmacy in order to create the GLP-1 drugs. What I didn't realize is that there's actually a law in America, and I think it has to do more states, but there is an overarching one as well, that compounding pharmacies can only come in and develop these type of drugs if they're on FDA low supply lists, which I didn't realize this was a thing. This makes me a little bit nervous with HIMSS, right? Because I think you had a lot of revenue getting, it's not realized yet, right? I mean, I think it'll be realized in the next quarter, or in the next report, excuse me, the release. But they're no longer going to be able to sell these GLP-1 drugs because they can't make them to compounding pharmacies because there's no longer a supply issue. However, one of the things I could say with HIMSS that is somewhat positive as well is that even before, you know, obviously we don't have the GLP-1 being reflected in any income statement currently, the sales from that, they were still on a pretty high growth kind of trajectory, which is a little bit nice. It's interesting, you know, let's see here. Okay, him and her shares surged after the company in May said that it would begin selling the compounded versions of the GLP-1 injections. The revenue jumped 52% in the second quarter compared to the year earlier to $316 million. And then, okay, so they did report a small portion of the GLP-1. That was $16 million from that $316 million, okay? I would reckon that the next report is going to have a much larger portion of that revenue, but that's a very solid, I mean, that's nothing to scoff at. $360 million and $16 million, okay? Again, we're not getting the full picture of it, but that's not a huge amount. I mean, that's less than 10%, right? So remains to be seen what's happening with HIMSS, but I think that's what these three-session sell-offs basically were, right? With Eli Lilly essentially saying that there's no longer supply issues, and remains to be seen. But this is it's a neat company, you know? you can get a lot of these compounds that you'd usually have to pay a lot of money for through your doctor or through insurance, and you don't have to do that through HIMSS. It's kind of neat, right? You even have Mark Cuban getting into certain realms like this as well, where they're selling these generics for a massive fraction of the cost. So anyways, it's kind of interesting to see what will happen with HIMSS. I still haven't formulated a strong opinion on it, but it's something I've been watching for maybe like a month and a half now. So, well, folks, stay right there. We'll be right back. We have some more stuff to crack into when we return.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Before we continue on, I want to take a look over here at TFNN.com. We go to the home page. All right, now this market's taken us all for a ride, right? It's been pretty interesting, but what's so awesome about these kind of times, I mean, look, if you went long at the bottom of this entire week, you'd be making some pretty good money right now. We've had some shorts open and have made some pretty good money on it as well. This is the time where you can really make a pretty solid return if you know how these technicals work and you got that discipline, right? So to kind of help you get started, or even if you're in it and you just need some more kind of input on something, we're going to take a look over here at TFNN.com. It's the front page. I navigated to Market Insights newsletter by Tom O'Brien. Now, this was updated August 6th. Okay, at that time, he had a total percent gain of 82.9% in his portfolio. It was unbelievable. And we said, hey, you know what? This market is getting pretty spicy. Let's throw him a bone here. You go over here to subscribe. If you scroll down a little bit, you have this code, okay? MI75OFF. That is going to save you quite a bit here. Let's take a look, all right? So go ahead and click subscribe. Well, we got to figure out why that's not working there. And the point is when you subscribe, you go plug it in at MI75 off, and that's going to save you 75% off your first month, which is, that's a big deal. That is a really big deal. So check it out. Again, the 30-day money-back guarantee still applies if this is your first time subscribing. And what that is if for whatever reason the newsletter doesn't work for you, you can go ahead, you send us an email, we'll give you that money back within those 30 days. It is a fantastic deal. Let's take a look again. Another thing to say is you can give us a call at 877-927-6648. We actually had someone call in yesterday, and the question was, how does gold do how is it going to do if we enter another Great Depression? Okay, it's kind of interesting. I guess you had some politicians discussing that this might be a case. I'm not sure, but it was interesting because I had not necessarily thought of it. And obviously times are a lot different, right? We're not in the Bretton Woods anymore or that gold standard. There's a big difference, right? So let's take a look here. I found this interesting. Let's take a look. I'll just pull up GDX right now just to get something up on that chart. I was doing some research on this. I'm going to pull over this chart here from Macro Trends. We're going to close that ad. These gray areas are when recessions or depressions happen, right? So, I mean, you're getting, right in here is really the Great Depression. And so you start off and you get this massive, massive increase. So you say, okay, well, darn, maybe let's check the next one, okay? Well, you start this little recession here. You get actually a dip down and then a dip back up, and things get better and people start fleeing to different kind of asset classes. This almost stays kind of straightforward in 53. You have a massive run up actually before the recession in the 70s. So you have this kind of different way that gold behaves. And I said, well, what was the big driver in the Great Depression? What I didn't realize is that the U.S. government actually seized U.S. citizen gold. They forced them to sell at a certain standard, okay, and then they slowly increased the price on it. I think they made it sell at like $26 an ounce. Could you imagine? That's a pretty good return right now. Let me see if I can get the exact numbers for it. But this was something that FDR wanted to do in order to maintain currency control. So you got enough gold and you can devalue the dollar against it, and this was supposed to kind of stimulate more economic activity. Now, if we look at, this is inflation, this is adjusted for inflation. If we take a look at the one not adjusted for inflation, you kind of get a different kind of look, right? Trying to find my mouse here. Right. Okay, my mouse isn't working on this chart, but let's take a look, right? So you actually get this kind of standard movement. We start from the left, you go to 1920, you get actually pretty big stability through it. And you have a lot of stability for the whole time, right? I mean, gold prices were getting fixed at this level, right? You have a time here where they're selling at that fixed price in 1930 in the beginning, and then you can see that push up where they increase the value of gold. But what's unique after this, and you see this in both charts, is that it seems like there actually is a demand for gold, at least after this Great Depression, during that time period. Because right after you get out, you get a little bit of stagnation, but then you shoot right up. So that's this idea of that pent-up demand for gold going forward. Now, this only goes to 1940, but it's kind of interesting, I think we have other asset classes now which might cut into this. It kind of remains to be seen. Naturally, there might be some gold buying in periods of deflation and really this, illiquidity, right? And the government wants to prop up some of that stuff. But it's kind of a hard call. It's a little bit interesting, right? Anyways, I found this all pretty unique. And let's be real, we live in a completely different world now, right? I mean, we're not on the gold standard anymore. Okay, we have, again, brand new asset classes, Bitcoin, you can even go into tech. People are still spending in that. I would say even in recessions, people are going to cut jobs and labor in order to spend more into certain kinds of tech. It's very interesting. Anyways, I wanted to bring that up to everyone because I actually didn't know that the government seized that gold, forced everyone to sell at a common rate. And it was interesting too because I'm like, hey, we were on the gold standard, so how does that affect things? Kind of interesting. All right, let's take a look at some earnings and talk a bit about Shopify here. So let's see what they're at today right now. Up 0.36%, but obviously you had a really significant gap up. Of course, kind of testing this area, probably going to test right before it drops as well. This is a strong second quarter performance. The e-commerce platform beat analyst expectations for both revenue and earnings. Shopify reported 21% year-over-year increase in revenue, reaching $2.05 billion for the quarter, topping estimates of $2.01. Additionally, the company saw improvement in subscriber growth and operational costs. Let's see if anything else for it. That's pretty solid. And of course, they're adding stuff in with AI too. This is a stock I don't really look at too much, but obviously everyone uses it. And, in Shopify as well, they allow for different plugins from different companies, right? They call these widgets. And I believe from what I understand is they're actually getting rid of that and kind of making everyone use their native technology within that platform, which is obviously pretty good to keep people in a certain area. Let's take a look at Taiwan Semiconductor, up 1.65%. Their sales jump 45% in July, obviously from the strong AI chip demand. Another thing I want to bring up about TSM2, which is somewhat fascinating, is something that Jensen Huang said a few months ago, right? Where he said that TSM is charging not as much as they could be for the fabrication of these GPUs. And that even if they increased the cost, that NVIDIA would still be using them. And I would reckon that's the case for everyone else that outsources the fabrication to TSM. So say you get kind of a weird time period, right, where maybe their sales are declining a little bit. Well, hey, they could increase the unit price and still be in the clear. Kind of interesting. We'll talk a little bit more about that when we get back. Folks, stay right there.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. Again, you can give us a call at 877-927-6648. We're talking about TSMC. Before we went to the break, they had pretty stellar sales in July, up about 45% that month. So sales for the month reached $7.93 billion, which is nuts. Last month reported second quarter results that beat analysts' expectations. They're also a beneficiary of the CHIPS and Science Act, which aimed at bringing advanced production to chips to the U.S. Yeah. Just want to talk about that a little bit because I think they have a nice little, like I said, buoy in case things go a little bit south for a few quarters in buying AI chips. In the sense that people are still going to buy some of them, and they can just increase the cost, and there's not much anyone else can do with that. Now, we'll talk a little bit about AMD. Some interesting kind of news from a security perspective from AMD today, off about 1.04%. That is most likely because there is a massive exploit, massive vulnerability, found in the actual firmware of the processor. Okay, and the response to it was like, hey, this is okay because it's at kernel level, so you still needed kernel level. This is not a good, that's not really a good defense for what happened, essentially, right? So it basically allows you to, if a hacker can get into the kernel level, you can corrupt memory, they can run code if they want to. Anyways, I mean, that would happen regardless if a hacker had access to Ring 0 at the kernel, but it's still a massive issue. It is kind of a little bit ridiculous that they said, well, hey, it's not a big deal because that's kind of a hard thing to get at. But think about it. Like, you have video games that have kernel level access, right, for anti-cheat. You had, let's say, a big malware company that just messed up the entire internet a few days ago because they had kernel level access in CrowdStrike, Now, for people like you and I, this is probably not going to be a big thing because nobody wants to hack us. But if you're a government, I mean, this raises some eyebrows. And there's been some discussion of, what happens if there really are vulnerabilities at a firmware level in these chips, let's say even from NVIDIA, right? I mean, this can turn into a really serious situation. I think they're down a little bit on that. But again, nobody really responds too heavily to security vulnerabilities when they get put out in the media. The market doesn't respond. So it's kind of interesting. But I just wanted to bring that to your all's attention because we talk about that sometimes on here. Talk a little bit, too, in that same realm with Cisco. So they have a second job cut this year. Okay, off a little bit right now. Obviously, you had a few days just going straight down on some okay volume. So Cisco is going to lay off thousands more in a second job cut this year. Okay, so Cisco will cut thousands of jobs in a second round of layoffs this year as the U.S. networking equipment maker shifts focus to higher growth areas, including cyber security and AI. People familiar with the matter, the number of people affected could be similar to or slightly higher than 4,000 employees that Cisco laid off in February and will likely be announced as early as Wednesday with the company's fourth quarter results, said the sources. Reuters exclusively reported the job cut that Cisco announced in February. The company employed around 84,000 people. Cisco did not immediately respond to a request for comment. Stock is down 9% year over year. The company has pushed, so they're making the switches. It's amazing they're getting away from that. Let me see here, because I think one of the things they could do if they focus on AI is actually put that on your layer 3. You could put that on your hardware. So like the routers, you put that on the switches. And so it's interesting that they're decreasing the stuff for networking because they're so prominent in it. I think they bought Splunk as well. Yes, this pushed the company to diversify with moves such as $28 billion buyout of cybersecurity firm Splunk, which it completed in March, which is pretty solid. But listen, if they start putting, like, let's say I don't think they're going to start making chips or whatever like that, right? But if they start utilizing certain programs and put that thing on your switches and on your routers, they're pretty competitive at that level. That's kind of insane. Anyways, off about 0.73% right now. So I'm just thinking, it's kind of nuts. It's nice to see. It's nice to see this move. And there's been a hiring freeze in a lot of areas in IT, especially with cybersecurity. But I think that's going to change pretty substantially going forward. I say that all the time. Let's take a look at Yeti Holdings, switching a little bit, down 4.92%, but that's off major buy-up on earnings. Let's take a look here. Yeti boosted its full-year outlook after increased cooler sales and international demand helped revenue beat expectations last quarter. And this is this weird conflicting information on an economic level, right? So, Yeti coolers, that kind of indicates that, people buying it have extra money to spend on stuff like that. If you get a Yeti cooler, you're going to go out and hang with friends, buy beer, grill out. And that's something you do when there's a lot of disposable income occurring, unless there's some kind of break between the newer generations purchasing and their financial situation. But the adjusted sales for the year are seen growing 8% to 10% above the previous forecast of 7 to 9. The drinkware and cooler maker said sales for the second quarter beat the average analyst estimate as international sales expanded as well at 3 times the U.S. rate. So Yeti shares jumped as much as 14%. The stock has struggled this year. The maker of durable bottles, coolers face tougher competition, and that's really from Stanley Cup as well. Just something unique to look at. I never know, I say fully, this is where technical analysis comes in very handy, but I think of things like on a fundamental level, a lot of times. And it's just, what do you do with a company that sells, their cups keep ice, and that's great, right? Their coolers are cool. But you have all these knockoffs that do something somewhat similar, and it's just hard for me to properly get a beat on companies like this. Regardless, you can't, deny that you're increasing 3 times internationally, and that's pretty solid for that stock. And it's not really a stock, you would expect to hear about either. Speaking of some more layoffs, showing this kind of this strain we're having economically, is Stellantis laying off 2,450 plant workers. That's because of the discontinuation of a Ram Classic pickup truck. Interesting. Let's see. Yeah, it's low costs, entry level. I wonder if it's just too expensive for them to create. Anyways, you're going to get a lot of this unemployment claims coming out of stuff like this. And then we can take a look at Elf Beauty as well. 1 second to pull everything up. Yeah. This thing's pulling back in a major way. What is the... Yeah, obviously. Sometimes you just need to guess on some stuff. All right, let's take a look at Elf. They had actually pretty stellar earnings, but today everyone said, hey, forget that, man. No big deal. Let's take a look a little bit at their earnings. The cosmetic retailer on Thursday blew past quarterly earnings estimates again, posting a 50% gain in sales. The company's sales soared to $324.5 million in its fiscal first quarter, leading it to raise full-year guidance. CEO Tarang Ammons told CNBC that the company saw growth across its categories. He added that its bronzing drop serum quickly became a bestseller on the company's website after launching. This is an EPS of 110 adjusted versus 84, and then revenue of 324 versus 305 million. Fascinating. We'll talk a little bit about why that might be dropping when we return. Stay right there.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Talking about Elf Beauty a little bit. Of course, they beat expectations. They're down a little bit. Probably just really a reset after a major bump up. It's probably people trying to take profits a little bit as well. They're spending quite a bit on marketing. Now, what's brilliant is this like TikTok approach that everyone takes. One of the things that would like send your head around is how many of these influencers and all these trends are legit just astroturfed by major corporations. That happens with Elf as well. I would suppose, I obviously don't wear makeup, but I'm sure the bronze drops probably help in some capacity. And it seems as well that their forward guidance, while it was good, it might have been the higher range of their forward guidance was at the lower range of consensus going forward. So that might be adding a little bit to it. I mean, obviously 15% is quite a big drop. I would argue it's people probably getting in around here with this kind of volume. Maybe even getting around here somewhere, and they're just trying to get some profit. It's nice though, you get kind of a reset. You see what happens going forward with it. If you can get some, kind of consolidation and then a movement up on higher volume, that would be kind of solid for that stock for sure. So this is the short segment. Hey, check it out. I'm going to talk about this a little bit because I talk about the nuclear AG. I don't know if you're listening right now, man, but I can send this to you. This is cool. This is talking about we're going to ramp up in nuclear, and China's already doing. Now, this is going to be really weird world where we're seeing China now. What I think is interesting, even though there's a lot of disharmony in the world, when that occurs, you get different approaches to problems, right? Which is kind of neat, right? I spoke about a few months ago how, when the Iron Curtain fell, right, or descended, we went with antibiotics and the Soviets went with bacteriophages, super cool. We're still drilling, doing the natural gas, and China says, hey, we might maybe going nuclear. Even if you don't believe America is gonna go nuclear, if China is, you bet your bottom dollar that you're gonna get some pretty high movement up in some of these uranium companies. CCJ is trading at $39.50 right now, up 0.89%. Folks, thank you so much for joining me today. I hope you all have a great rest of your weekend. I hope your calls went good. You closed out of your puts early. I hope you all have a great rest of your weekend. We'll see you Monday.